All right, the S&P 500 and the Nasdaq 100, you can see the SPY is moving crazy, lots of strength. Buyers clearly stepping in. We look at the Qs, very similar thing, breaking all-time highs, breaking out, had that nice kind of flag, higher lows established, continuation, clearly in the in the works here. Now I will say Qs are very close to testing that $500 psych level up here. That'll be very interesting to see what happens there. Seems like yesterday we were just testing the $400 psych level, so very interesting to see how we are moving here right now. Now this week is going to play a pretty big factor because this past week, if you don't remember, we had our jobs data and unemployment hit 4.1%, which is the highest that it's hit in a long time, going back to around 2020 roughly, right? Worth mentioning, unemployment is very, very low. But what I will say on the other end of this is that this week you do have some very important inflation data going into Thursday and Friday. Okay, you have CPI, core CPI. Okay, then on Friday you have PPI, also very important. Okay, now on top of this, what's happened now is that you've put the Fed in a position where they might be put in a corner to where they have to start cutting rates. And that's ultimately why the market's getting so much love. Because traditionally, no, unemployment isn't good for the market. It's not a good thing that happens. But when you're getting inflation dropping on most of these readings, and on top of that, unemployment is rising, you're getting a perfect storm for what the Fed wants and what the Fed has told us that leads to an ultimate cut on the market, right? So it's very important to understand where we're at, what's being priced in here. And at this moment, they're pricing in about 3 cuts still here on the year. But I do want to say, okay, the first thing I want to say is we cannot bet all of our money just on this. Okay, I want to make that really, really clear. Now, also too, just want to point this out in the beginning of the video. Why is cutting rates bullish for the overall market? Okay, again, the most bullish thing here right now is if the housing market and the cost to take loans goes down based on these rates. You're already seeing your mortgage rate drop. So this was back in October when we reached highs of around 8%. You're at 30-year mortgage, right? You've slowly been on the decline, right? And we're trying to break trend and continue back to the downside. This was our high going from 2022 basically to here and going all the way back, for the past like 10 years. So we're still very, very elevated. Now, I don't think, mortgage rates are coming back down to 3% or 5% right now or anytime soon. However, if rate cuts do happen, I think this could definitely spur home buying, drop the cost of rents as well in inflation. And then also, again, it'll be strong for the overall economy, which again is why the market's reacting so bullish to this. So very important for us to be able to digest this and understand what's happening in the broad market because we do, again, like I said, have a lot to unpack right now. I will also say we have our earnings coming up as well. Very important, okay? Earnings this week in particular, okay? Again, it's wild that we're already back in earnings season, right? We have Wells Fargo on Friday, Citigroup, mostly banks coming into play now. And again, this is like the first little wave, and then we'll have more next. I think we have Netflix next week. So again, it's heating up, things we have to be paying attention to, and big overall plays here. But again, earnings have been what kind of have kept us afloat. We slow down into earnings come in, they continue the bull case as well as growth. And then inflation data has really tipped us over the edge. And that's what's happened over the past few weeks. Okay. Now, also, to you guys, I recommend if you're not already, hit the follow button. But also, Twitter is where I post all my charts, as you can see here. Non-stop posting charts and updates. It's just the best way I can communicate with you guys. So make sure you check it out. The link is down below. Also, too, guys, I want to give a special shout out to Moomoo. I'm going to be using, obviously, their options here on the video, but it's who I use to trade all my stocks with. The link is also down below if you guys are interested. Lots of free education as well on the platform, and they also just portray things very simply as well. It's why I love using them. Customer support is awesome. We have all these other brokers going down. Moomoo has not gone down so far, and their customer support always picks up. So let's get back into the video and let's go over a few things. Now, giving you levels on the Nasdaq and ES are going to be pretty a waste of time, right? Because we're at all-time highs. I always say this: when you're at all-time highs, you're in no man's land. You can do your fib extensions if you want to. I'm not going to waste time there today, guys. It's really, as long as you're making higher lows and higher highs, you're bullish. There's nothing to worry about. I do urge some caution going into Thursday and Friday with CPI and PPI. just because inflation has, been on the downside. If data comes out bad, this could really start to slip. So I just urge caution into those days, but if it comes out good, then obviously continuation is likely. The other big thing that has me worried right now, and it's been an area of the market that I've been really focused on, is oil and energy. Like I've mentioned, oil has been bouncing very strong. Now, a rule of thumb that I usually follow here, and we're on the daily chart to let you know, is I usually go about 20 days back, roughly. So if I go 20 days back from July 5th, we go back here, you're at locally around June 12th, June 15th right here. You have a little bit of a reaction in this area to where you're getting a little bit of a price in of what's happening here on oil and energy. And it's worth mentioning that, in my opinion, okay, if we just hover over and we just inject SPY in here and we can really just take a look. Let's get rid of the 200 SMA so you can see real quick. But you can see that most of our pullbacks on SPY have been led by a rise on energy prices, right? So any dips we've had on SPY have really been led by a big run that we've had there on energy. And then when energy dumps, inflation usually continues in the right direction. That's what's happened so far. So I want to highlight that there is a risk going into this CPI and PPI that we could start seeing the energy prices impact this, but I don't think we're seeing a bulk of it yet. Okay, that's still the important part. I think closer to the end of the month is when we see it really start to impact this, but I'm definitely still on that, area of caution, because you still have to price in that big dump that you had right here, as well as basically, the bounce back that you had. So very interesting where we're at. Definitely you need to be paying attention. Okay, so will be something that we'll track more down the line this week, but again, just an urge for caution. I do think energy could start breaking back out. On the other side of this too, with Donald Trump leading back in the polls and what's happening with the election, I think we'd be fools to not pay attention to what's happening in the polls. Trump is very bullish, in my opinion, for energy. If we go back to his, last presidency when he came in, early on when he came in 2016, he had a great run from basically 2016 all the way into the end of 2018 on energy. Very strong run on oil, okay? So I'm not saying that exact thing's going to happen, but it's an area of caution, and I think energy is the one area that you need to be watching on inflation in general. Okay, DXY. What's happening here? Again, we're seeing more of a pullback. Makes sense with what's happened with unemployment. As unemployment came in, we've seen DXY and the dollar top off. Another big area that's important here on the dollar and what's happened with broad markets is that you were seeing the Japanese yen really take a toll on the dollar. The yen was just getting devalued across the board, and the dollar was just going berserk against it. So it wasn't necessarily that the market was net bullish on the dollar, in a risk-off environment. But what I will say is that it's important to understand what's happening out there as well. But now you're seeing the dollar come back to reality and back what's happening with the market. We saw the yields as well. The 30-year yield come back into 4.6%, kind of coming back down now. We want to see that get back below 4.4% to really start getting the impact here. We are still making lower highs, worth mentioning, and lower lows, but we want to see what happens here. And then going into the 10-year yield as well, important to track the lower yields. You can definitely see that you're still in that downward channel as well, worth mentioning, okay? So you can still see exactly what's happening there, and the breakdown is going to ensue here as well. So risk on, risk off, you're still in that middle territory when we go to the yields and with the dollar. And I do think this week will be very big because it will play a big role in what happens going into the next Fed meeting with rate cuts. So again, worth mentioning, worth watching. And again, this end of this week will be very, very telling going into next week for what's going to happen with the next Fed meeting. Okay, biggest thing I can say out there right now. Now, again, you probably came here not to go over what's happening with yields and even the fundamentals. You came here to most likely talk about what's happening with the stocks, okay? And so I'm going to go over a few plays that I'm liking, stocks, equities that I'm liking, and where I could see them going. But first, really quick, going into Bitcoin as well. Bitcoin looks absolutely terrible here as of right now. The 200 SMAs, I always tell you guys about these levels, and I'm telling you, you got to track these, okay? The 200 daily moving average, you're so far topping off right now. If you get back above 58.7, it's worth the long, in my opinion. But until then, very weak. You can also see this level here on Bitcoin. It was a major support. Now it's turned into a resistance, another major red flag. So be very careful here on Bitcoin and anything related to that, because I know a lot of you guys might have questions regarding Bitcoin right now, and that's just my overall view. So let's start from the top with something like Tesla. Now, again, I've told you guys a lot about Tesla and what's happening here. All you really needed to do was two things. One, you trade it when it gets above 206, the daily 200 SMA, and it was bullish. And then above the weekly 231, it was bullish again. A lot of people are trying to go long here. You can do whatever you want. It does have a little bit more upside in my opinion, but I'm targeting more of this level right here near 260, 261. You can zoom way out and see where this level comes from. The SR level right there. This is where you have some resistance coming in, 260 to 264. And then your next level to this is around 297 to 300. So going to be interesting to see how this really starts to play out. You can also see what's happening here as well with the kind of downtrend that has been at play here. I've seen a lot of different versions of this being drawn out. A lot of people were talking about what was really happening here, this downtrend that's been finally broken out of. But again, it's important that we really look what's happening broad markets as well, because you can still see you're kind of in that area. I don't want to be a stickler on what's happening here. Do what you got to do. Tesla still looks pretty damn strong. But again, you're at some major key levels right now. Over 264, you're looking for 300. Very, very easy trade there. You had a lot of better setups when it goes to the options chain here. There's not tons that I like here when I look at the chain, and I don't feel confident about talking too much about this. But yeah, like you're getting to the 260s. They're just expensive now, so do what you got to do. You know, day trades, weeklies might be the way here, but I don't want to talk too much about that because I don't have the best feeling about those positions right now. Next up, I want to talk about CrowdStrike, probably one of the better setups across the board. Again, here on the daily chart, you can clearly see higher lows established, top around 393, 390. You're really looking for the mount above this level and then the push into and above 400. I've been very adamant about this on Twitter, so if you follow me on Twitter, you've seen it, and I'll keep the updates coming. But you want to see this mount above 393 and really get going there. I still think there are some good opportunities here if you're trying to trade CrowdStrike with confidence. I do personally like the 719s, the 400s. They have moved very well. They got to lows of $5 on the 5th. They pushed back into highs around $7. So again, great action, great movement there. But do what you got to do. That's just one of my favorite plays there on CrowdStrike. Has been a good mover. Definitely am watching CrowdStrike closely. I think it's probably the best name when we go into cloud names. You know, PANW is another good name, but you're getting close to up there as well. You know, ZS is another one of my favorites. I've been talking about above the 200 daily SMA around 393. You mount it, you're pushing up, probably going to 220. So again, these are just some of my favorite names, what I'm watching. I'll keep these posted, and I'll make sure to have some more updates coming to Twitter as well. Again, I can't harp on it enough, guys. Like I really do recommend you're following on Twitter. The link should be somewhere in the description down below. It just is the easiest way for me to post these charts and answer questions, and I always do chart requests there as well. Going a little bit further, a lot of you guys are going to be asking about things like Apple. I can't answer any more questions here on Apple, unfortunately, for you guys. I told you when it was dipping, it was the best long, most likely of the year. Congratulations if you got it. You know, I think at this point we're overcomplicating things. You had the bull flag, you broke out, you mounted 211, 214, now then 220. You know, you missed out. If you didn't get it, you didn't get it. I'm sorry. And the options we were mentioning were the Apple, and I said this was the best trade most likely of the year. I said it over and over and over. It was the 220s. These things were under $13. They're at $22 now. The risk was extremely, I think at lows they got to $10. I do want to say they got closer to $10. But yeah, like the 28th, let's go to the daily. I'm just curious where these got down to. They get down to around $12, $11 here, $10 there. Yeah, they're $10, $11. So again, over 100%. Congratulations, guys. But yeah, there's going to be more plays. The big play that I think is there right now is Amazon. I do believe Amazon wants to break out here. It's been the stickler. It's been the slow snail in this race. And you are trying right now. You look good. Amazon higher lows clearly established. You ended the week basically at 200, mounted its previous all-time high at June 27th. You're really trying to get going. And the thing that gets me excited here is your ETF here, XLY Consumer Discretionary. It's been moving. It's been moving great. You zoom out, you can see you broke out clearly there. You have more room. Basically, you're coming into resistance around 190 here on XLY, but above that, it's clear skies. And the thing that's holding consumer discretionary and really breaking out isn't just Amazon, it's Tesla. So again, I do think Amazon is the next one up here. And when it starts to break out, it's going to take XLY even higher. Then break that 190 area. So again, Amazon giving you a clear target. I can't. I'm sorry. You're at all-time highs. I'd be looking for 205, 204 roughly, but this thing can honestly run much further. That's only 2%, 2.5% higher than where it's at right now. So I think I'd be doing it a disservice. But Even with Apple, we didn't expect it to run to 220 from 200, but it did, and it was a fantastic trade. I think Amazon has that type of potential with what they're doing. Personal opinion, one of the better looking AMs out there. I've mentioned a lot of options here on Amazon. I don't really know where else to go with this. I like the 719s a lot. You go past this date, you're probably going to start pricing in some earnings that are going to be happening here. Again, I like at the money positions at $4. You're like, man, I'm not going to maybe be a millionaire off this. No, you're not. But you're going to make good money if it starts to really move. You're going to be able to capture it. You're not going to get stuck or scared out of your position due to volatility. I like closer at the monies, maybe 205. So I'm feeling risky, feeling froggy. That's what I would do there on Amazon in particular. Microsoft, this was a great setup. Just what happened here was gross. You broke out. You kind of had a bear trap, and you went ballistic. That was awesome. I just missed it, so I can't say anything there. I just missed that trade, guys. Sorry. It is what it is. I got to be honest. Meta, a lot of you guys are asking about this one as well. I was telling you guys, I said above 510, fireworks. I said it on repeat. And then in Discord, I told you guys about this level right here, 513, 514. Once you got over that, it was game over. You went to and broke all-time highs. In a perfect world, what you're looking for here for any type of entry level on Meta is a BRB off this 531.5, your previous all-time high. I don't know if that's going to happen because you already mounted it right there. So it's hard to say. Meta looks very strong as well. Again, if I'm trading Meta, though, I'm usually going shorter dated. I was telling you guys on Meta about the 330s for 719. You guys do not want to look at those contracts anymore. You'll be sick to your stomach. But yeah, that is bizarre what happened to those they went from like $5 to $20, so that's crazy. Literally 300% on Friday. So again, Meta is a tougher thing to trade. Hard to say now. I'd be probably targeting towards the 550s to be honest, but again, you're just risking a lot now to trade this. So again, staying away from it. These are just the names that have already run, so it's hard to want to double dip back into those. So hopefully you guys understand where I'm coming from here. Okay, so we're just trying to find the next big stocks I can get to moving. And right now for me, that's Amazon, that's CrowdStrike. That's these names here. They just look the best to me. And I'll keep you guys posted and updated. Now the next one, again, we're running through this list today. I think Netflix, big mover potential here. I've been talking a lot about this on Twitter as well. So again, if you're not following on Twitter, I recommend you do so. July 5th, I called it out back here. July 3rd, $700. I said it was loading $700 at 683. So again, free stuff on Twitter. But again, as you can see, you broke your 52-week high right here. You broke out. You're retesting and mounting that level. Your all-time high is around 701. You're starting to get that push in it now. This is what you wanted to see on something like Meta. This is what has to get you, or on Netflix, this is what has to get you excited. The craziest part here, though, is when we bring up our volume, okay? And again, guys, if you're interested in our custom indicators, the link is down below as well for Luxago. Code OD40 for 40% off your first purchase. But again, you're not getting crazy volume yet. A little bit of surge of volume, but nothing insane. Once volume really kicks in like we had before, that's when you're going to get the big move. And I do anticipate when Netflix finally breaks all-time highs of 701, I think volatility will come in where this thing could really start running towards 720, 730. Netflix really hasn't had one of those big volatile days that it's used to having. Back here we went from 650 to 675 in 2 hours. We've had some pretty crazy days back here, 620 into 650, $30 day. This is not out of the norm for Netflix. 578 into 626 in a day and a half. So again, Netflix is another big play here. The contracts I've been mentioning on Netflix, this is one of the trickier names because you have earnings on the 18th. So in a week, basically from now, or a week from this coming Thursday, I believe. Okay. I don't like that date for earnings personally. Do what you got to do. I'm not going to trade. I don't like the earnings play. I've been talking heavily about the 700s for the week prior to earnings. And they've moved a lot. So you went from lows around $2 to highs of around, $9. Play it how you want to play it, guys. But this has been one of the best names and really volatile names. You can trade after earnings as well. Expiration, you're just not going to get the volatile move necessarily unless it really goes crazy. But I'm not trading any of these stocks for their earnings. And if I do, I'll be very clear about that and post it on Twitter. I don't love trading stocks into their earnings. It's just not my favorite thing to do. Like I said, you have banks earnings this week. This will be interesting for banks. Okay. You don't have JPM and Goldman Sachs. They'll report early next week, not this coming week, but the next week, the week of the 19th. And I do think they will be a must watch. This is a little bit ahead of the curve for you guys. But JP Morgan, for instance, is a big name you need to be watching. We've been talking a lot about them. They're breaking out, remounting 205. That's really bullish in my opinion. Goldman Sachs also trying to break out. You can see that they're all trying to really get going. JPM is probably doing the best. But if Goldman can break above 471, fireworks probably start to pop off here. Really impressive as well. So what you're watching for there as well. You go to something like Morgan Stanley. Still looks pretty good, trying to break out. Also, not quite at all-time highs yet, but has a lot of room. Wells Fargo, WFC, also trying to break out, trying to get back into their all-time highs around 66. So you can see banks do look really interesting and good. Because, again, rate cuts are bullish for banks. Rate cuts are bullish for banks, okay? Funny, key level was at $37 up there. You broke above 37, you bounced it, it went crazy. So, again, you know, this is from a while back. So, worth mentioning, these levels don't change, guys. They're always going to, you know, remain for us. So, make sure you're paying close attention. Banks look really good as well, especially going into the earnings coming up. But those are my favorite names so far, okay? Now, a little recap before we end the video. A little bit of a recap. Obviously, in this week, okay, core PPI is on Friday. Core CPI is Thursday. Those are your biggest things across the board, okay? Everything else is secondary to those key factors. Make sure you understand that. You have some mortgage rate information coming out there. Will be interesting. You have Fed Powell talking on Wednesday. These are important, but I'm telling you right now, what will dictate the overall movement, which could reverse us back to the downside or get straight continuation of the upside, are these reports near the end of the week, okay? I think the Fed conversations are interesting. They could be very bullish. They could really move us. And I do personally believe that the Fed talking, I think that most of their statements will be net bullish for the economy because unemployment is rising and inflation is dropping pretty rapidly. Those are good things and what you want to see. So I can't see the Fed changing or getting a weak tone until bad data. It's the same thing I've said all year. Until bad data starts to come out, and bad data hasn't been anywhere on the horizon so far. Okay, so when do I urge caution? Closer to Thursday. That's when I urge caution. I think we have upside potential going into the early middle part of the week. Slow down around Wednesday. You get more of a decision on Thursday and Friday. So those are the biggest things, okay? Make sure you understand that. Twitter, again, I'll have updates. I'll have charts for you. I'm going to be doing a little charting right now. If you guys have questions as well, make sure you tag me on Twitter. I try to answer all that stuff as well at all times. Like, I'm not like discriminating. As long as you guys are trying and asking educated questions, I'm going to give you an educated answer, okay? Also, too, guys, if you did miss the newsletter this week, it's going to come out next week again, okay? Go over here, newsletter, right? Every single week we drop this for you so you're prepared on the market. You know what to expect. Make sure you tap in. It's absolutely free. If you guys want education as well, it's on our site. Absolutely free. Go over here to education. You want to start learn more about the market, how we trade. Again, it's all here for you. I'll see you guys tomorrow. Have a good one, traders.